What's up, guys? Let me get the tweet out. Let me make sure. Actually, let's see if it starts. All right. Looks like we're up. Let me tweet this out real quick and then be right back. Hold on one second, guys. All right. Boom. Tweet is out. Get back to the stream. There we go. All right. How's everybody doing? Hope you guys are having an amazing weekend. Beautiful weather here where I'm at and absolutely enjoying the time away from the screens. Living my life. Hope you guys are doing so as well. What's up? And what's nice is the Chiefs aren't playing till it's the night game, it's the evening game, and so I don't have any distractions. Should be a good game. They're playing the Titans, and both teams are 5-2, so somebody's gonna be 6-2 after tonight. I'm hoping it's us, the Chiefs, baby. Yeah, thank you, Cruz. Appreciate that. Javier, what's up, man? Yeah, like Cruz is pointing out, if you guys could like the video on YouTube as well as share the link, whether that is sharing the link on your Twitter, Instagram, Facebook, whatever, or just retweeting the tweet that I just put out. Every little thing helps, guys. I really do appreciate it. You know, it's funny, like sometimes things like these are, you know, you have to put in a lot of time and effort and repetitiveness to get any traction with these types of things. Me and Goose back in the day used to do like a pre-market show. And I just remember, man, like, you know, it starts out hot. You always have a bunch of people come in to watch. But then after like a few weeks of it, it just fizzles. Like, it's just really hard to get traction when it comes to creating content for the trading community. But I'm not giving up. I don't know how long we've been doing these Sunday preps. I think I've been going for over a year now. And, you know, I'm just keeping my head down and continuing to do it and hoping that eventually it starts to gain traction. So like Cruz was saying, man, every little bit helps. Retweeting, sharing the link, liking the video, subscribing to the channel, leaving comments on the video help, I believe. I'm not a YouTube guy, so like I really am not 100% sure about that, but I think I've heard people say, you know, the more comments something gets, the more the YouTube algorithm will share the video with newer viewers. So if you guys have any kind of feedback, whether it's constructive criticism, things you like, things you don't like, we're all ears. Please leave the comments, guys. Cruz says, unless you're yelling and making an ass of yourself, it's rough in these streets. Yeah, I mean, I do a pretty good job of making an ass of myself. I ain't shy. Got one more minute and we'll get this kicked off. I have tonight, I'm hoping today's episode's actually going to be a little more succinct. You know, a lot of times these can get, you know, into that hour and 15-minute time frame, but hopefully tonight's is a little bit shorter. The intro topic is more of a teaser than anything, and I think you're going to like it. And we'll see how it goes. We'll see how fast we can get through it. Again, remember, like, when we get to the broader market, I'm only going to really analyze the ES or the S&P and just make notes as needed on the Nasdaq because they're usually so similar. We'll still cover Bitcoin for all the crypto guys. And I am freestyling, you know, like I was going to write notes on the ES, and every time I do that, I just feel like I'm reading too much, right? So like, I'm just going to give you my live thoughts on what I see when I look at the S&P and the levels I'm going to be playing this week. And same goes with the sector analysis, looking at the ETFs and stuff. So when we get into that, just realize like this week, I'm going to go back to the free flow format, and hopefully it comes out really well. It saves me a lot of time in terms of how long it takes to actually prepare these, because It's one thing for me to look at a chart and just speak about what I'm seeing. It's a whole nother thing for me to like take notes and write down, a really long list of all the things I want to cover. So anything to make this a little bit less of a pain point for myself is always a bonus. All right. So it's market time, 5 p.m., 2 p.m. where I'm at. Let's get this started, guys. I'm Ricky Analog. This is the Sunday prep. This is November 6th, so this is for the week of November 7th moving forward. Remember, we have a short week. Friday is Veterans Day. Shout out to all the veterans. My wife is a Marine, so it's it plays a big part in our household, and we salute all the guys out there that served our country, right? If you guys don't have a broker you can trust, please check out Cobra. I'm telling you right now, I wouldn't recommend a broker that didn't go above and beyond. These guys, hands down, best customer service in the industry. These guys are amazing. Check them out. There's a link in the description that'll save you some money. If you like saving money, I don't know why you wouldn't. Check them out. Spikey, these guys have a platform that allows you to pull historical stock data. You guys know that I track data meticulously. I couldn't do what I do without them and the amount of time they have saved me, guys. There's a link in the description for them as well. Spikey or Scripts to Trade, these guys have created tools for Thinkorswim, TradingView. They write algos for NinjaTrader. There's not much they don't do. They create everything from the ground up. They sell it in a subscription-based package now where you get the whole suite of their tools. And if they don't have a tool that you're looking for, reach out to them because they will work with you and create whatever it is you can dream of. I can't speak highly enough of these guys. They're amazing. We have a tool that we're about to drop that we created that's going to help traders visualize the asymmetry of a trade. I believe it's going to help a lot of people, so stay tuned for that. It's coming out very, very soon. TraderView, if you're not tracking your performance metrics, you're playing yourself. Stop playing yourself, guys. If it's 100 trades or less per month, you can use them for free. Obviously, you don't get all the bells and whistles, but there is a link in the description if you want a discount on the paid service. Trust me, you need to know these. You need to know this data. All right, guys. And earnings, as always. I mean, this is probably, I know that like the last 2 weeks have been like the big weeks, right? With the big guys reporting. Actually, was it the last 3 weeks or 2? I can't remember, but this is the week where it's just jam-packed. Like now it's like almost as if when I look at this calendar, it's who isn't reporting this week, right? This is a big week. And in fact, it's part of the reason why the prep this week is a little bit shorter is because I know I'm going to have my hands full with just the names that are reporting, guys. So that's that. Let's talk about the topic today. Friday, if you guys have been following me for any amount of time, you'll remember that like back in November last year, I was very transparent about what I was going through and the fact that I was switching to a much more systematized trading methodology. And I'd always felt like I was very systematic. I had defined my strategies and what it was that I looked for. And it's not till you kind of like get punched in the face that you absolutely have to kind of take a better look at your situation and ask those tough questions. And what it turned out was, even though I, was very loosely using that term systematic, there were a lot of things about what I was trading that was very discretionary, and I needed, health reasons, relationship reasons, trading reasons, and just like mental reasons. I needed to like basically reinvent myself and my trading journey. And so it became, that was my mission, right? To systematize everything, track everything, even more meticulous than I had already been doing it. And so last Friday was my 1 year anniversary of tracking my main setup, the main thing I trade every single morning, the first 30 minutes of the day, what we talk about at True Trader all the time. And so, for the guys in True Trader, they're about to get, this coming week, I'm going to have a video that does like a recap and like a look back analysis of how all that went, the aha moments, the pain points, the things that like I recommend other people do when they're starting out that journey. And so if you guys are on the fence about joining True Trader, obviously I would love it if you guys would come over and, just flat out subscribe and be a monthly member. But if you're on the fence, there is a 5-day trial. It's only $30. And if you want to use it, this would be a good week to use it, because you would get access to this video that I'm going to create about the last year of tracking this data on this system, and the way it's traded, and some of the results, which were literally like not short of like breathtaking, like jaw dropping, eye popping. It was just insane, right? And so I'm going to just show you a bit of a teaser, because I'm not going to get into all the details. That's going to be reserved for the guys at True Trader and the video I'll create. But this is just the cumulative P&L curve, as well as the account balance curve of this over the last year. And as you can see, you know, it's been just an absolute beast. And in fact, we've just kind of come out of what we were calling the drought, and you can see that over the last few weeks, it's gone really parabolic. And so there's a lot of stuff that were key takeaways. One of the things that was a big thing for me was, you know, just being able to keep a pulse on the market. And, you know, when I started tracking this back in November last year, it was like a really very active time in the market, meaning we had earnings, which we are going through right now, and the market was still in a bull market, and things were flying. And it was nothing to have, you know, 15 to 20 A+ opportunities for what I trade every morning in the first 30 minutes, which is absolutely monstrous, because what people fail to recognize is, like, yes, expectancy is a function of your risk reward and your win rate, but it's also, there's a third factor in there, and that is frequency of the opportunity. And it doesn't matter if you get 10 to 1 on a trade and it has a 90% win rate if that trade only presents itself once every 5 months, right? The fact that this setup was presenting itself so frequently was what made it so that P&L curve could be the way it is. It's you know, it's very much so the byproduct of the frequency of the opportunity. And so the reason I'm getting long-winded on that part is because in October, actually September and October, was really, really slow. You know, there were days when there were 0 opportunities in the first 30 minutes. And I kept telling everybody in the community, like, look, like, this is why we track the data. This is how we keep our finger on the pulse. Don't worry, it will come back. This is just a quiet period. And, you know, lo and behold, November kicked off. Actually, late October and early November kicked off, and we are right back to where we were 1 year ago, with the amount of opportunities presenting themselves that frequent. And, you know, I couldn't have done that. I couldn't have remained that confident and patient and calm without the data. It was such a key element to doing that. And the other thing I really wanted to highlight was that this P&L curve was achieved by base hits, and it wasn't a whole lot of home runs. You know, it was done risking 0.5% of the account value on every trade, and, you know, keeping tight risk, stopping out, you know, at very defined locations, and letting trades go to defined targets. And this is the win rate. I want you guys to look at that. And so also, I guess it highlights how many trades there were, right? In 1 year, 1,289 trades. But it wasn't like it, you know, 45% win rate. A lot of people would kind of scoff at that. And you know, the people that would scoff at it don't understand that it produces this, right? I guess I need to get rid of the win rate. That win rate produced this, right? And what's funny is, the guys in True Trader will get to see this when I make that video recapping, but like, I can adjust things in my spreadsheets to account for, you know, wider stops, or, you know, more leeway on the trade, in order to do what? Why would we want to use wider stops? Mostly because you don't want to have such a low win rate. You want to be able to win more often. But the craziest thing happens is when you win more often, the expectancy drops. Because you're using wider stops. What happens when you use wider stops? You can't put on the kind of size you could if you were using a tighter stop. And obviously there is a sweet spot, and you have to use data to figure that out. But, you know, you got to kind of get away from that, at least for me, right? Like, I guess I can only speak for me and what my data tells me. And that is that I need to not give a flying about win rate at all. I need to be perfectly happy with just knowing most of the trades ain't going to work. But guess what? Having the data allows me every single morning when these stocks are kind of ripping and flying and, you know, things are moving fast, to not hesitate in the least bit to put on a trade and let it play out. Because I know as long as I do that, then it's going to take care of itself. It's just this magical math equation that I try to talk to everybody about. You know, you just have to understand that trading is a numbers game. It's not about, you know, you got to check the ego at the door, because you know who wants to have a high win rate? People that feel like they need to be right. That's not what the stock market's for, guys. The stock market is a mechanism to extract money. And, you know, what most people fail to realize is that you don't have to be right all that often in order to do that. So, like I said, if you're on the fence about joining True Trader, this week would be a great week to use the 5-day trial, or just join flat out, because I'm telling you, the value that we try to offer over there is unparalleled. And so, yeah, that's coming, guys. If you're in True Trader, I hope you're getting excited, because you know, as soon as we're done this Sunday prep, that's probably what I'm going to work on, is recording that. And yeah, I'm hoping that everybody is just as blown away by the results and some of the aha moments and insights that I gleaned from this as I was, right? So that's it. Let's get into the Sunday prep, guys. Neither I, True Trader, nor any of our affiliates are licensed or registered as security broker dealers. I'm not a licensed financial advisor. Anything I talk about is for entertainment purposes only. It is not a solicitation to buy or sell any stocks. Now, I'm laughing a little bit because before I started doing the Sunday prep this morning, or this afternoon, I caught my daughter over at my desk, and she's sitting here, and she was literally doing my monologue for the disclaimer. She's like, "I'm Ricky Analog, and neither I, True Trader." It cracked me up, right? But enough of that. Here's your ES, guys. This is the S&P futures, right? The E-minis. This is what I basically use every week, because I just like to be able to see things with the Globex and without the gappy nature of the S or the SPY chart. So this is your monthly chart. You know, the one thing that I still am going to stick to that I talked about last week is this thought that, you know, I really do think we sort of start to tighten up the range and possibly go sideways here and build a bit of a base. You know, I don't care if I'm wrong, but what I do want to do is make plans for that being a possible scenario, because if that starts to happen, there's all, you know, one, we need to learn, you need to recognize it as early as possible, because trading a range bound market is way different than trading a trending market, whether it's trending down or trending up. And so you have to understand that, and you also have to be able to understand when things change, right? If we're in a channel and we're basically coiling, building a base, there will be a time when that does pick a direction, and you have to know what to look for that as well. And also what it could mean if that, when we pick a direction, one of two things happens: the trend begins going that way, or that fails and possibly rolls over, you know, or vice versa, right? But what that could mean if, when we pick a direction, that ends up failing. Because what I can't help but think that if we just coil up, you know, in this little range here and get tight and then bust out of that, that a lot of people go, this is it, the new bull market is starting, and everybody rushes in. And when you get so many people plowing in because they're scared that they're missing the beginning of the next bull market, if that fails, this can get really ugly to the downside. And that's the only thing I kind of want to be ready for, is knowing what to look for when things are, one, picking a direction, and two, if they're going to confirm or fail. So get rid of those. Let's look into the weekly chart. Again, we pushed into the underside of the weekly 20 and basically rejected right off. It came down. You know, what I'd like to see now is maybe a narrow week, and then the next week try to push up, because what we still need to do is we still need to see the author try to hold this trend. What is the trend right now on the weekly time frame? It's down, right? I mean, hopefully everybody can see this, but it's just trending perfectly. You know, lower highs, lower lows, and every time we push up here, we get that little short continuation setup. And so what we need to have happen is that to happen again is we need to have this little kind of short continuation trigger set up right here, which can possibly try to take us lower. I don't think it does take us lower. I think if this sets up, I think the attempt to go lower fails. And what that can possibly do for us is give us a higher low on the monthly time frame. And remember, I don't know how many weeks ago it was, where we were kind of setting up for just that. Let me get rid of some of these things. Okay, 1 second. Was that all of them? Yeah. But if you guys remember, when we had this month here, this was September, right? When we were pulling back, we did the Sunday prep where we discussed the ability to anticipate that higher low, and when when I think that it's higher probability or better chances of being right, and why you would want to anticipate. Well, we still have a lot of month left in November, right? So I would like to see us kind of go sideways for a few weeks, and then maybe in December have that attempt to go lower and possibly put in that higher low on the monthly time frame. Because if we do that, we'll get that same scenario we had in September, where you have the ability to possibly anticipate. If you see things setting up, you see good risk reward, and that's where I'll be if that happens. And the cool thing is that because we're talking such higher time frames, we're not in any kind of rush. Like we have all the time in the world to first identify that and then make plans. It's not something that's going to happen overnight. So I'm not worried in the least bit. I love these kinds of scenarios because we're talking, it takes weeks to develop, and we can start to make really, really good plans. Now, as far as the daily chart, we did reclaim the daily 20, and we're still pulling back to levels and holding, right? So I do think that coming into this week, I have zero bias. I'll fade major pops, I'll buy major flushes. If I see trends form, I'll join trends to either way. I really don't have a bias at this moment. We've both resolved to the daily time frame. We've also resolved to the weekly time frame in terms of imbalance versus balance, right? We talk about that a lot. So the levels, you can see a lot of these levels are the exact same ones from last week. 1 second, there we go. So a lot of the levels, like last week's, previous week's highs, those are. So again, I don't know if we're going to gap up, gap down. We'll find out what the Globex is going to do in a little while. But if we were to open flat to gap downish, the first level I'm kind of looking at is the underside of the 50-day / quarterly pivot. Also, it was the FOMC breakdown level, right? This candle here was your FOMC, the big push up, the stuff, and then new lows, right? So any kind of pop back up into those levels, as long as we're not opening close to them, I'll be looking at as a potential area to fade any kind of parabolic moves. And then remember, when the market pushes really hard into those areas, if you want, you could fade the market on that move, but I'm really looking at individual names that are also getting extended, making emotional moves, and also going into key levels and have a lot of liquidity. I'm waiting for those levels on the broader market to express my trades on individual equities. So make sure you guys know that that's what I mean when I talk about these things, all right? Above the 50-day / quarterly, then we have previous week's highs is the next level. Above that, 39.75, and above that, 4,000 / the annual pivot. And again, I'll go a little higher. I don't think we're going there early in the week or whatever. I could be wrong, but the 200-day and that quarterly pivot up here in the 40.90 area. For the downside, for support, this 37.20 level, if we open flat to gap upish, any kind of flush back down into these levels, if we look at the 5-minute chart, you can see 3 or 4 times this thing's tested down here. I mean, it's tested a lot, but even just on Friday alone, right? Boom, boom, four bounces right off this 37.20 to 37.16 area. So if we open up and we flush really hard down in those levels, it's a really no-brainer indication for me to be looking to bounce individual names that are also flushing into key levels. Again, make sure you guys understand you're listening to a guy that just told you he bats 45%, right? So it doesn't mean that I'm going to be right, but it means I'll take my shot, and that's what matters, right? I'll shoot or shoot, but we also, in this game, man, it's all about knowing when to walk away and fold that hand, because the best traders in the world are really good at losing, right? So if we flush down here, I'm going to put my trades on. But if we lose levels, or the individual equity that I chose to express that trade doesn't behave, it's getting cut, right? And it'll just be another trade in a year full of over 1,000 trades, right? So it's just another trade. It doesn't matter. And that's how you really need to look at these things, right? No one trade should be so important that you're sitting there fighting it and getting stubborn. All right, so back to the levels. 37.20. Below that, I've got 36.40. And below that, 35.90. And of course, we have the lows down here around 3,500 if we were to get down there. Okay, so those are the levels, the way I'm playing SPY. Remember, kind of unbiased coming into the week. I'll take longs, I will short parabolic pops into levels, and I will join trends in either direction. I don't really have a bias coming into this week. Let the market kind of pick away, or pick a direction, and then play accordingly. NQ, I do believe I wanted to mention one thing about NQ, and that was just the fact that it's still relatively weak in comparison to the S&P. Remember, last week when we talked about it, it still had room back to the weekly 20, and this week, it took a big dive, and we still haven't got up there. Thing is it still hasn't made new lows yet either, so there's still the chance that this does resolve back up to the weekly 20. Lots of tech names reporting. A lot of the big names, the big tech names, are out of the way, like Microsoft, Apple, Google, Amazon, Meta, right? And those are the ones. Apple was really heavy on Friday. Microsoft has been just can't find its footing, right? So if those major weightings of the index get a bid, then this thing can go. But if they stay heavy, then it is what it is, right? You just have to understand the way that these things work. But yeah, that's the only thing I want to talk about with NQ, is just the fact that it does have a lot of relative weakness in comparison to the S&P. Bitcoin still looks good, still starting to curl and trend. Remember that, now that we resolved up to that weekly 20, we might find resistance up here, but remember, over that 25, I don't want to butcher this, 25,214, okay? $25,214.57. Above that, that's your monthly trigger. That's a big trigger, right? That's the pullback, the major pullback to very, very key support levels that are black and white. Everybody can see this. This is very objective. It's not, this isn't like, oh, I don't know if that's a key level or not. That's a goddamn key level right there, okay? Pull back to that, push up, higher low. This higher low will be confirmed a higher low if we push back above that 25,000 level. If that happens, there's a lot of room back up to the monthly 20, right? And there, I think there's a lot of people that have been kind of waiting to see, like, when is it time to get back in Bitcoin? I think, and obviously I don't trade this stuff. I do trade a lot of the equities that follow them, but I feel like this is starting to show you that the risk reward is kind of favorable. If, even if you're wrong, the risk reward's really in your favor here, right? This is the kind of thing where, if you're risking below 17.5 and you're buying in around 20, anticipating it breaks above 25, knowing the monthly 20 is way up in the 40Ks, right? That's a really, really big asymmetric trade. Let's just illustrate it just so we can see exactly what it is. So let's just say 40K, you're wrong below these lows, okay? What is this? Let me pull it to the side. You're getting 5-1 right there, guys. 5-1 risk reward. That's the kind of thing where, as long as when you take your shots, you're getting 5-1, you can be wrong all the damn time, which you cannot do. I want to be very clear about this. One thing you cannot do is look at this and go, I want that. I want that trade. You're getting 5-1, put the trade on, and it starts to work, and it, starts coming up into these levels up in here, and you're already selling, right? Because then you're skewing that expectancy. The expectancy is based on the fact that you're going to get that risk reward if you're right. Because guess what? You're still going to stop out for a full R if you're wrong. So you better sure as hell be getting that 5R when you're right, especially if you're going to be wrong quite often. So I just want to point that out about these kinds of setups we talk about. You can't put this trade on if you're really going to just take it off when it gets up here, okay? Because that's like 1-1, and you're probably going to be wrong. Now, if we clear 25K Now you're going to be right. Your win rate or the probabilities of this working are much higher because now you have confirmation. That's the difference between confirmation and anticipation. So let's get into the sector analysis. Look at the stock market sector matrix. This is the short-term one. This is barchart.com. I highly suggest you guys check this out because I love the way they lay this out. The first thing that just stands out is that it's, a lot of red, but there's a few that are, green, and you really want to always pay attention to that because in a sea of red, you want to find the relative strength. The same goes for vice versa, right? In a sea of green, you kind of want to be identifying the things that had relative weakness. So you got materials were green, industrials, and we talked about both of them looking really good last week and having relative strength. They had some follow through. Energy still good, and then you have a bunch of red. Now, definitely want to pay attention to the ones that were really red, right? The communication services, which shouldn't be a surprise. Tech and consumer discretionary. That's a important one to note. Okay, so let's look at our ETFs, and I'll tell you exactly the thoughts I was having about them. And they're really pretty straightforward. And I'll tell you right off the bat, a lot of these, what I noticed right when I look at them is that they started to curl. If we are playing this as though the lows are in and we're going to kind of have some consolidation and go sideways in the broader market, a lot of these are pulling back to the key levels that you would expect to hold if we're going to stay strong. So it's pretty simple to see. I don't know if I have to draw this line or not, but you can see all these tops right here when this was kind of flagging, right? So here's your little breakout, and we've pulled back daily 20 and we're holding. Thursday green, Friday tried to come red and put a little, put that wick down at the bottom, got bought back up towards the end. Yeah, it closed red on the day, but we're still holding some key levels. And that's what I want you guys to notice about a lot of these ETFs is that these are pullbacks to support. And if we're going to stay strong, those levels need to hold. If they don't hold and they start to fail, that's telling you a different story, right? So I think retail looks pretty good here. Doesn't mean it had relative strength, but I do like the fact that it's holding key levels, okay? XLF, this one, I would love for this to pull back to 32, the 20-day. The fact that it can't even get back there is kind of really telling you that it has a bit more strength than, in terms of relative strength, it's a little stronger, right? It wasn't able to get back to the 20-day. Doesn't mean it can't, but it hasn't. I would love it to. I would love this thing. It's really easy to see it when you kind of look at this higher time frame intraday chart. Here was your failed breakdown right here, and ever since we reclaimed and triggered to the upside, it's been up and away. It would just look so perfect to kind of come back, see all these lows or these pullbacks that held these levels, how they line up with where was resistance, and we can't. I just want us to get back there before I put capital at risk. The last thing you want to do is be buying financials, like whether it's Citigroup, Morgan Stanley, Goldman Sachs, whatever it is you're looking at buying. You don't want to be buying them and then all of a sudden the sector does the pullback that I'm talking about now, right? We want to come back into support, show some support, and then look at the ideas. So I wish XLF would come back down in here. It hasn't yet. We will continue to monitor, okay? Real estate, reclaim, again, reclaim key level and hold. This is one I really like too. I think healthcare has been behaving very well. Reclaim, pull back, hold. If this continues to hold above the 200-day and starts to curl, I think there's some trades in there on the long side. Materials, again, we were talking about that when we were looking at the matrix here. Had a green week, relative strength, pulled back to a key level and held. So again, a lot of these things are behaving pretty well. I think that lends a lot of ability to start to search out individual names that you like the charts and start asking yourself, where can I put trades on where the risk is mitigated and I think we're going to have some good upside. Industrials, same thing, had relative strength. This is the one where I still think any kind of pops up into 97 to 98 will offer pretty good fades, but again, the strength is there. I'd rather see pullbacks hold and look to get long certain names in that sector. Utilities, still think this one, needs to get faded if it want. This is the one we talked about where I don't like megaphone price action. So again, I think these pops up into the weekly 50 and 20, which is $70. Call it 70. Is where we need to put in a lower high. It very well may happen here. We're kind of retesting that trend line that got broke, but I would rather see us push up into this 70 area first. So I am kind of thinking that the utilities needs to stay a little bit heavy on pushes up into those levels. Staples looks pretty good still. Pull back, hold key level. I think you can that's the other thing I forgot to say about some of these. A lot of these where you see these Friday candles where they got bought back up, as well as the lows kind of line up with levels from Thursday. I think you have the ability to use Friday's lows as risk, right? If if this offers a flush down into like 71 or this monthly pivot 70-74 just above the 50-day, I feel like you can be looking to scoop those areas with pretty defined risk. If you're looking to trade something in this sector, right? Discretionary, this is the one that was really weak, and it looks like it's flirting with a big breakdown. Wouldn't surprise me if this thing loses these levels and could really start to unwind. So in fact, I'm gonna go ahead and set an alert there because I do want to know when we start to lose those levels. I'm just gonna put this in real fast. All right, that way I do understand when we were breaking that key level, because this is the kind of thing where we've been holding, people come in, hold, people get long, pull back again, probably more people buying thinking it's going to hold. If it breaks, you have a lot of people that got to bail from their trades. I think that's when these bigger unwinds can start to happen. Communications, I'm not trying to be long anything in this sector at all. I think short all pops back into the 20-day as long as it's not broke, don't fix it type thing. And by that, I don't mean that this sector's not broke. I mean shorting pops back into resistance ain't broke on this. Biotech still continues to act well. I think you can still be buying dips on this and thinking that this is going to get a push. I still really do like this sector. Tech, pretty heavy, pretty weak. I feel like pops back into key levels, definitely fadeable. Again, lots of names reporting, so make sure you understand who's reporting, how the market reacts to their reports. Is negative news getting bought back up, or is negative news or negative reports getting punished? We've seen some where they're missing on top, bottom, and lowering guidance, and the market lets them flush out. Everybody gets short, and then they just get bought right back up and burn a lot of people. So you have to kind of like be analyzing how the market reacts to the numbers, not just what you think should happen. Whoops, I'm gonna do that. Energy and oil. Again, energy pretty much at the target. It didn't quite get there. Remember we talked about this long trigger over 85.20s should be resolving back up to these highs. I still think the trend is very favorable for the long side. I don't buy. These are the sectors where even though the trend is up, and I think if you are really looking to put capital to use on the long side, you want to be where there is a bull market. That's oil and energy at the moment. Even though I think that, I still don't want to be a buyer when we're extended, right? I still want to be patient for pullbacks, because the second you start buying up here in these areas, that's when you get the pullback and you get shook out when you should be buying. Same with oil, okay? Same thing with oil. Still has room back up to the target. I still think dips can get bought. So that's your sector analysis. We're going to jump right into the ideas. Again, I told you there's not a whole lot of them because there's so many earnings names this week, and I'll be really busy with them. But there are a few I'm watching. So let's look at long setup, strong stocks looking for continuation. There's going to be some names on the list this week that might surprise some people. First one is CROX. You probably are like, why is Ricky talking about CROX? I won't wear them, but I will trade it. I really like this daily chart. I just think it's setting up really beautifully. The way that they had the earnings reaction and the big straight up candles, I'm looking for a dip buy opportunity off 79. Basically, right into that monthly pivot. Also, Thursday's kind of high day, and a retest of this little downtrend line that it broke out of. So any kind of flush back into 78.50 to 79, I think is a dip buy opportunity on CROX. The next idea is SLB, and I know I just told you guys I don't want to chase strength when the oil and energy feels like it could have a retrace, but this is a name I've been following for a really long time. I just love this chart, like the bigger picture chart here. I love this. The pullback, and this was a beautiful long continuation trigger that we talk about all the time. Right here, you have the big pullback, higher low, the breakout right here, and straight up, right? So and this is a weekly chart, remember, so this is, you know, we need to kind of get more granular when we start to make our plans. But right now we just had this little high tight flag up here that busted out to the upside. I do think that you can get long this name with probably risk versus Friday's low a day, and a retest of that break. I just feel like any kind of flush, what I want to see is buyers step in right away and soak it back up and have it put in a nice green candle on the day. And if that happens, I feel like this is one where I would leave a trail. I would probably leave a runner to see if this does want to absolutely continue higher for the bigger picture idea. But definitely something I would enter as a day trade with the forethought that I'd probably leave a runner on if it closes strong and I have a cushion. Next idea. This is another one that's probably gonna like blow your mind why I'm talking about this. TPX, Temper Sealy. This chart, again, just kind of like CROX. I like this chart. Earnings are out of the way. You had a nice reaction to the earnings. I've got a little alert set right here where it says it's basically a break over this high here. It's kind of anticipation, right? So over 29.12, I've got an alert set to possibly join trend. But it doesn't. When I say that, guys, you probably want to ask a very important question. Do you mean intraday or do you mean on the daily? And on this setup, I would actually be referring to more of a bigger picture daily chart trend join as opposed to a intraday long idea where I see a trend develop in the day. So over 29.12, and then I'm probably a buyer on dips back into 27.50 for more of a bigger picture idea. But I like this chart a lot. I just thought I should put it on people's radars. Remember, over 29.12 is kind of anticipation because the real level that does need to break is up here. So, you know, even a break over 29.12, I'm not rushing to get involved because all it could do is rush right up into 30, stuff its face on that level, and give us the pullback that we're looking for. All right, and the last name in this section is EDU. And I know I told you guys I don't want to F with this Chinese stuff, but this chart is really setting up to possibly have a big move. You can see I have the alert set up here. It just says stock. So a push over that level. And then now when I say I would look to join trend on when I get this alert, I am talking about intraday because I will not trade the Chinese stuff for swings at all. It's way too gappy. For all I know, we wake up tomorrow morning and this is gapped way up. We've seen it with PDD, BABA, all of them. Every time we wake up, they're either gapped way up or way down. And that has to do with time zones, right? And the Shanghai. But this chart, you know, I know a lot of people are so negative on this because it's such a POS. And people are like, yeah, it's junk, it's trash, it's probably a scam, it's a fraud. Great. The more people that think that way, the more explosive the move above these levels can get. And this thing could really, really take off, guys. So I just want to make sure if we break above key levels that I get that alert so that I know that today might be the day. All you got to do is get the alert, pull up the chart. Is volume coming in? Is it starting to develop a trend? Are higher lows holding? If so, have your game plan ready to go. So that's it for long stocks, for strong stocks looking for continuation. There's one stock in the oversold reversion setup, and that is Crowd. The first level of interest I have is this 119 area, which you can see where I got this level from. This is a weekly time frame, right? So this is the first real level I see support at, is this 119 area. If that level doesn't work, the next spot I'm looking at is down here around 95. I don't think we go 95 this week, right? I think there's a good chance of 119 this week. But just know that this will probably be on my watch for multiple weeks, right? I will watch to see if this gives an opportunity off 119. If it stays heavy, wants to go lower, hands off, reassess when we come back to the next level. One thing I will not do is if we break 119, I won't start getting involved at 110 and 100 and 98. No, after we break this level, I don't want anything to do with it again until we come to my next major level. If it doesn't get there, guess what? This guy sitting in front of you doesn't mind missing trades. I care less. Track your data. You'll quickly realize how many trades you missed, but they don't matter. It doesn't matter at all. So that's it for the long setups, guys. Now we're gonna head into the shorts. Weak stocks looking for continuation. First one on my list, CHWY. This thing was heavy on Friday. I really just think any kind of pop into 3660 is my spot for a fade. You guys can see this level's been key for so long, 3660s, right? Support, get back under it. Reclaim, support, now it's resistance. Reclaim briefly, now we're below it again. Any kind of parabolic pop into 3660, I'm fading that. Again, 45% win rate. I don't mind being wrong. Have a plan, guys. Next one is PayPal. I am looking for, I believe, what did I write down? 80. Yeah. Should be pretty simple to see. Basically the major breakdown level, and we also had, let me get to a different time frame here. This candle here, which probed up on the earnings, right? And that's where it's stuffed. So I just feel like any kind of pop back into 80 has my interest. I don't care if this stops me out. There's so many levels above where I'll revisit. 85 to 86, up in the 90s, wherever this thing wants to go, it's going to give some good trades. With earnings being on Friday, we should have really good liquidity still on Monday. Obviously, as we get further and further away from the earnings catalyst, the volume will taper back down to what is typical for this name, which, it still always trades, quite a bit. But right now, when it has the higher liquidity, any kind of spike back up into 80, I think there's a lot of bag holders up there. So I'm definitely looking forward to an opportunity to hit it up there. All right. Overbought reversion setups, the last section of the list. Caterpillar. This thing is getting pretty dang extended. Higher to better. You hear me say that every time with these setups, and I know it sounds really cliche, but I just want you guys to understand that, it's the truth. We don't have to pick a top. I don't care if, yes, I'm interested in 230s, right? 232. Yes, I'm interested 237. But if it just blasts through there, that doesn't mean that I'm getting ran over. Because when we're looking for these bigger picture, overextended daily charts, all you got to do is just wait for those lower highs and set risk and put the trade on. And when you're right, you're going to be right big. When you're wrong, you're going to be right. You're going to be wrong really small. And so that's why I love these setups so much, because it wouldn't matter one bit if you're only right 1 out of 10 times. Because when you're right, these things really, really pay. So the higher the better, and like I said, I know it sounds cliche, but it's not, okay? Now, that being said, depending on where we open, if the broader market gaps down, if this thing gaps down, if the materials and industrials are weak, you might have a shot at fading this versus Friday's high a day. So you might be able to fade this right into that quarterly pivot with really tight risk, and it might already be ready. We don't know how high it's going to go. But if that doesn't work, like I said, there's many levels above. The first one, I think, is that 235 area where you have the monthly pivot. And then above that, I would love to see a blow off into the all-time highs. Anything up into there is like a gift, especially without any major resets happening prior to that. JCI is the next one. And again, I'll say it again, the higher the better. Okay, rip into 6650 has my attention. I don't want you guys to think that you're confused where these levels come from, right? I want you guys to always feel like it's pretty simple and straightforward, why I'm seeing these levels, right? So 6650, the next spot I'd be looking at is right here into 68, and above that into the annual pivot around 70. 70 is that psychological round number as well. So higher to better, but I am stalking this one for the fade. I think it's getting a bit ahead of itself here. And the next one this is the last one, guys. I I feel like 78, 79 is a little bit close, but I will watch it. I mean, it's a very, very obvious level, right? You had all those recent levels that once they got broke, that's where all the bag holders are, right? Anybody that owned this prior to that big gap down on earnings, they are all praying for this to get back up there so they can get out break even, or small loss, or maybe a small win, whatever it be. I think there's a lot of people bagged up there, but 80 would be nice. Quarterly pivot. It's also the gap fill or the 200 day, right? Wherever this thing wants to rip into, I will be stalking it for a fade. And actually what I did write down is I like the monthly pivot in that 82.60 area, but if I put that trade on, I would do so knowing that this may very well have the 200 day in its sights, and that I'm, making sure that I'm sized appropriately so that, one, I'm going to keep tight risk so that if it blows me out, I'm ready to re-enter at the 200 day, or I would size small knowing that I would want to add and be more convicted up at the 200 day. It's not right or wrong. It's just personal preference how you would like to trade that. I personally would probably be, willing to put about a third to a quarter size on in the 82.60s if it started acting right, and be okay with it going to the 200 day and then seeing how it behaves. But again, to each their own. All right, so that's the prep. Those are the names that I'll be watching this coming week. It's a week jam-packed with really big names reporting. So there's going to be a ton of other plays on my watch. This is just the things that don't have earnings this week that do deserve to be looked at. So I'm going to check and see if we have any questions. We might not actually have any. Let me see if I can find. I can't even find where that chat pop out went, but let's see. Javier says thoughts on Nike short at 99.50 or 100. I mean, the obvious thing is yes, just because of the psychological round centennial number of 100. I would actually think that it would be a fade anywhere into the underside of the 50 day and the monthly, knowing that was kind of a failed breakout on Friday. Let me see the intraday on it. 1 second. Did anybody even see what caused the move on Nike? Because remember, I know we were looking for news on it, and I don't think it had news, right? So I'm not even, depends on where it opens. If we were to open anywhere in the 94 area, any kind of pop into 97.50 would probably have my attention for a fade with risk over highs. And then if it doesn't work, I would revisit it at the 100 level, up into those areas. If it gaps up, I'd probably let it blow out over those levels right into 100, see if it stops a bunch of shorts out right into that key level, and then gives a nice fade. So yeah, it's a good eye. Thank you, Javier. KH is asking about Microsoft, says bag holding Microsoft 244. Would you look at Microsoft long, please? Last week it was nowhere. Well, like I said earlier, like the tech giants like Microsoft and Amazon have just been getting slaughtered. And KH, I feel like I talked to you about this a lot, and that is, you gotta quit getting bagged, bro. There's no excuse, and this goes to anybody out there listening to this. There's no excuse to draw down more than you had planned on when you put the trade on. If you bought something at 244 and thought it was a long, and you didn't stop out when you were supposed to stop out, there's something deeper there that needs to be fixed than just trading, right? It's most likely in a mental side of the game versus technical, because you obviously know where you're wrong, and now you know you're bagged. You got to fix the mental side of it, whether it's ego or just inability to accept a loss. But like I said, man, like 45% win rate and the P&L curve is parabolic, right? We don't got to be right very often. But what you cannot do is get bagged by a stock, right? So if I'm looking at Microsoft right now, I'm telling you right now, it looks like a short into the underside of the 20-day or anything into 234. That being said, I think it has a good chance of pushing up. Why? Because it had that failed breakdown on Friday, right? Where just took out Thursday's lows right here off the open, off that early flush, and then reclaimed. But it's going to need to trend for quite a while to get up there, right? So, in order for this to even kind of flirt with levels where you're bagged from, you're going to have to sit through a lot of like, oh, it's trending, it's going well, and then boom, and then it's going to roll over, test key levels. Do those levels hold? Does it begin to trend again? Because it's not just going to go straight back up to where you're in from, even if it's going to go there, right? So one, you're going to have to sit through a lot of emotional roller coasters because that's just the nature of how things trend. It was no different on its way down, right? Like when this thing was coming down from 244, let's see where we're at here. So up in here, my guess is you must have been holding it through earnings. I'm not sure why that was the plan, but it wasn't just straight down to where we're at. There was a lot of bases being built, bases getting broke, retest stuff. Oh, looks good again. Oh, fail, roll over. So I think we can push back up on Microsoft just based alone off the fact that Friday's price action had that failed breakdown, but it doesn't guarantee anything. And regardless, like I said, dude, you gotta fix that issue of bag holding stocks because I know we've talked numerous times about numerous stocks, and it's always the same story. If you constantly are getting bagged, then you got to change whatever you're doing that's getting you in those situations. You can't keep doing the same thing. Kay says Twitter is tanking huge due to everyone. Why? Twitter is nothing. It's a buyout, right? It's not even. No, there's nothing going on. Twitter is getting bought out at 54.20, right? Am I wrong? I don't even follow it anymore ever since Elon inked the deal. But yeah, there's nothing there on Twitter. Do you think Tesla will take a hit based on what's going on now? Not sure. Dan's asking thoughts on GDX. I got calls last week. Technically, I mean, it's just gonna it looks like it's just coiling. Like I think it picks a direction soon, but I don't. Personally, I don't see any trade there. Doesn't mean there isn't one. Remember, guys, when I say that, like, I can be wrong. I don't care. I don't have a horse in the race. This is just coiling to me. So either we break above this and start to hold higher lows and go, or it can come all the way back down to the lower range of this pennant here and maybe hold, but it also could break and stuff and make lower highs. So again, and especially when it comes to anything that's related to commodities, I really try not to have a crystal ball. I'd rather just follow the price. Susanna Valdez, do you believe that Visa will continue its trend up? I took a small position and I'm risking Friday's low of 195 and I got in at 199. Let's go look at Visa. One thing that Visa has going for it is what? It's in the financial sector, which we just talked about, that ETF and that sector looking really good, right? It's pulling back to key levels, and what needs to happen is that key level needs to hold. You can tell I look at Visa from time to time. You can see I've already got the chart kind of annotated a little bit. What I like to do is look at higher time frames, right? So right now, this is what I'm seeing here. I mean, this is not going to be a perfect drawing by any means, but I just see this channel, right? So it's reclaimed that weekly 200. It's I know it's going to be the monthly 50 as well. Let's see. You're risking, let's see, I want to read the question again, make sure I have this right. Risking Friday's low of 195. And you're in from 199. Yeah, I mean, here's the main thing I'll tell you. What I like is that you have a plan, right? This does need to hold, but I don't know if 195 is going to be one of those kinds of stops that's just too tight and you get nicked out of it. But regardless, do not change your plan, okay? If your plan's your stop is under 195, do not change your plan. Stick to your plan, and then you can always kind of assess, was your plan good or not after the trade has played out, okay? But if I were not involved in the trade and I was looking to trade this, I would be looking for the 20-day, the 50-day to be the kind of level for it to hold. There's obviously some levels below it too that matter to me, and that is mostly this breakout level here, which was, you had the failed breakdown right here straight up, and then that was where you got your high or low and then the trigger. So above, as long as it's above 190, I think it's still got a good chance of just trending and getting going. But again, we're talking something that I think would take multiple days to play out. Again, I don't want you to change your plan. I'm very, very happy that you have a plan. That's what really matters. Create a plan and then trade the plan and then reassess everything later. All right, guys, 1 second. KH is asking, thank you for the BTC chart. How would you play that? Do you buy coin long if you have BTC game plan 1 to 5 risk reward? Like I said, I don't trade Bitcoin, but I always give the analysis for the people out there that do, because I know a lot of people that watch this are just mainly crypto traders or involved in that space. But if I trade anything, it is based off the equities that follow it. But the crazy part is there's been a big disconnect with Coin and Riot and Mara and the price of Bitcoin, right? Like, look at Coin. It's just been down, 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 even when Bitcoin's been doing relatively well in terms of technically. So for these kinds of names, I'm not going to let Bitcoin dictate my game plan if this is being highly correlated to the broader market as opposed to Bitcoin. Hope that makes sense on that. All right, guys, I think that's it for the questions. I'm going to call it there. Like I said, I wanted to keep this one shorter than usual. I hope it was. I can't see the time on it right now. But like I said, if you guys are not in True Trader yet, it would be a good week to try the 5-day trial for $30, because I am going to create that video that highlights the look back of the last year and the data from the system I've been trading. Also use the code YouTube to get 20% off on a subscription. And like I said, if you don't understand the things we talk about in these Sunday preps, come over, because those are the kinds of things that I get much, much more nuanced on for the guys in the actual community. And again, if not, I'll see you in the markets on Monday. Hopefully it's not your money I'm taking. Peace.